Hello, investors. Welcome back to Mali Investment Talks, and thank you for listening, for tuning in and listening to me, or watching me for that matter. Joseph Areo are my names. Continuing the crusade, if you want to call it, of empowering you to be able to make competent, safe, sustainable investing decisions, to be able to grow your wealth, to give yourself good liquidity as and when you need it, and to give yourself sustainable investment income. We have been talking about the do's and don'ts of several products in the financial investment space. We've talked about do's and don'ts of bonds, both corporate and treasury bonds. We've talked about do's and don'ts of bills, treasury bills, as well as corporate paper. Today I want to talk to you about the do's and don'ts of shares. I did talk about shares some time back, but I would like to sort of recap what we talked about with regard to shares, in particular what we would call the do's or don'ts. So you will recall, ladies and gentlemen, that shares are good usually for long-term growth, right? So because you are basically investing in the opportunities or the growth of the company, if the company does well and it grows in the long term, you will benefit significantly as a shareholder. But shares are very risky. There's no secret about that. We talked about that several times before. Shares are very risky. You are exposing yourself to a risk of loss, maybe potentially even total loss of your capital, of your investment. That is something you should never lose sight of. In particular, this is the case when you are investing in what we call ordinary shares. When I'm talking about shares here, I'm talking about ordinary shares. It's a category of shares which basically guarantees you no payouts, whether it's dividends or capital. It's not a guarantee, but if the company does well, yes, you can actually, on the other hand, get an outsized payments if the company is doing well. So it's a high risk but potentially high return investment. Shares, ordinarily, in an average market, should have good liquidity. In other words, you should be able to easily sell your shares as and when you need to. But please always verify how good the liquidity of a particular share is. In other words, how easily can you sell that share if and when you needed to? And it's not very difficult to check that. Read the business press. Many business publications would publish the performance of different companies in the stock exchange, the performance in terms of the volume of shares that have been sold or have been sold on a particular day compared to yesterday or last week. You should be able to get a sense of trend of whether the volumes have been going up, the volumes have been going down. Generally, the higher the volume of shares sold, the higher the liquidity of that counter, right? So you should be able to get that information from your press. You should also be able to get that information from your broker. You can always talk to your broker, find out how liquid a particular count a particular company's shares are, and use that to inform yourself about liquidity. That, of course, is assuming that liquidity is an important variable, it's an important factor for you in buying the share. In the long term, yes, you will need the share to be liquid so that you can sell your shares as and when you need to. So shares, good liquidity, but verify. Depending on the company, or sometimes depending on the market. In other words, the exchange, the shares market in a given country. If, for instance, that market doesn't attract so many investors from around the world, then it could be a struggle for you to sell your shares as and when you need to. All right? So those are some of the don'ts, the do's and don'ts that I want to share with you about shares. Once again, before you buy a share, especially if you're buying it from an IPO, initial public offer, always remember to read the prospectus or get someone to read the prospectus and help you to understand about the fundamentals of that company whose shares you are buying. That is something very, very important. Thank you very much for listening to me. Again, thank you for watching me. I hope I'm helping you once again to get empowered to make independent financial investment decisions for the sake of good health of your investment portfolio going forward. And do remember to reach out to me using my contacts at the bottom of the screen, or indeed to reach out to any other investment advisor or financial advisor to be able to give you or tell you more about these products. Thank you, and I look forward to talking to you again.